Welcome to the bonkers.ie podcast. I'm your host, Caoimhe Birmingham, and today myself and Daragh Cassidy will discuss how Irish banks' decision to embrace eco-friendly homes could shake up the entire mortgage market. We'll examine AIB and its subsidiaries, Haven and EBS's reduction of their fixed green mortgage rates and Bank of Ireland's new pricing structure, which will see buyers' interest rates being based on their BER rating of their home instead of the size of their loan-to-value ratio. But how will these changes affect the mortgage market here? And can all homeowners and first-time buyers expect to benefit? Stay tuned to find out. Daragh, welcome to the show.
Thank you.
Before we explore the impact and future of green mortgages in Ireland, let's take a look at the mortgage market as a whole first. Ireland currently has the 7th highest mortgage rates in the Eurozone. The median age for first-time buyer is 39 years old, according to CSO, and house prices are on the rise. So tell us, is the mortgage market as dreary as it sounds? And what is the current state of it?
So there's been a lot happening over the past probably 2 or 3 years. Just looking at the mortgage market, first we obviously saw the exits of Ulster Bank and KBC, which was a big blow to competition. Seeing two big lenders leave the market is never a good thing. But then on the flip side, we also saw a new lender enter the market relatively recently called Moco. It may not be a name that's familiar to many people, but you might hear it being mentioned a little bit more over the coming months and year or so. We've also seen the credit union start getting into the mortgage space a lot more. And then, of course, in recent weeks, we've seen some mortgage rate reductions. But then before that, we obviously saw a huge increase in rates as a result of an increase in rates by the European Central Bank. So a lot has been going on, but it hasn't stopped, house prices going up, these increase in mortgage rates. House prices now are at record levels. I think the feeling was house prices would begin to cool a little bit as a result of the mortgage rate increases. And whilst we did maybe for the first few months after the ECB started hiking rates see house prices begin to ease a little bit, over the past maybe 6 to 9 months, that's completely reversed. House prices are picking up again. They're at record levels. And of course, as you said there, it is getting difficult for first-time buyers to get on the property ladder and to buy their first home. Although there are schemes out there to help them, I always encourage people to read up on them, such as the First Home Scheme, the First Time Buyer Scheme, and so on. There's a lot happening, and maybe over the coming weeks and year, we might see mortgage rates begin to decrease, which in some ways will be good for home buyers, prospective home buyers, and existing mortgage holders. But there is a big fear that could lead to further increase in house prices.
So speaking of high interest rates, there are rumours that the ECB will lower its interest rates for the first time this summer since it began raising rates in July 2022. Is there any truth to those rumours? And if so, who will benefit the most?
So maybe just quickly to go back to where we are. So around 2 years ago, the ECB started hiking interest rates in order to combat inflation. So as we know, there's been a cost of living crisis for the past 2 years. Inflation increased both in Ireland and throughout Europe and indeed the world quite significantly. And central banks all over the world hiked interest rates quite aggressively to try and dampen inflation. So the ECB hiked interest rates by 4.5 percentage points. So it was a huge hike. But it does look now, particularly that inflation is beginning to ease, that from June maybe they will start to decrease rates. And by the end of this year, they may have decreased rates by maybe 1 percentage point in total. So they may cut rates by 1/4 percentage point in June, again in July. And as I said, maybe by the end of the year, they could have cut rates by 1 percentage point in total. Now, what does that mean if you're a first-time buyer? What does that mean if you're looking to maybe switch? It's a little bit complicated because the banks only actually passed on less than half of the ECB rate increases, believe it or not. So they did hold back. And you said there at the start that Ireland has the 7th highest rates in the Eurozone. Even though we have the 7th highest rates, it's still quite close to the Eurozone average. And for a long time, we had the highest rates. So the reason why we've fallen down the table is partly because the banks didn't pass on a lot of the ECB rate hikes, whereas they did in other countries. So because they haven't passed on a lot of the hikes, they may say, well, hang on, we didn't pass on the increases, so we're not going to pass on all of the decreases. So it kind of does depend. If you're a tracker customer, that's obviously different because by law or by under the terms of your contract, your rate has to go up or down depending on what the ECB does. So if you're a tracker customer, happy days, you're almost guaranteed to see your rate begin to fall throughout the year. But if you are on a variable rate, that may not change, at least maybe not this year. May not be until next year that the banks actually respond to the ECB cuts. And if you're a first-time buyer, we'll see, some of the banks are already beginning to tweak their rates downwards a little bit, but will they respond to the whole, amount of ECB cuts? Maybe not, because, as I said, they've only passed on less than half of the ECB increases to date. But it does look as if this year things are better in the sense that we'll be talking about mortgage rate reductions and not mortgage rate increases.
So if there is a decrease, that will benefit over 180,000 people who are on tracker mortgages. And there are 70,000 homeowners on fixed rates that are due to come off their fixed rate this year. So there might be a lot of people like those on fixed rates who are looking to switch, same with variable homeowners too. And a lot of people might start looking towards green mortgages. And that's what we're going to focus on today, because there's been a lot of change surrounding green mortgages in Ireland in the last few weeks. So first off, can you just explain what a green mortgage is and the difference between a green mortgage and non-green mortgages?
Yeah, so a green mortgage is basically a mortgage rate that usually has a discount. It might have a 0.2 percentage point discount, and it's usually given to people who buy homes that have either an A or a B energy rating. So every home has an energy rating from A to G, A being the most efficient, G being the least efficient. And then some homes, such as maybe a Georgian home, a home that was built 200 or 300 years ago, may have no rating at all. And what the banks have done in recent years is that they have given lower mortgage rates to people who buy more energy efficient homes, quite simply. And as I said, that discount might be, let's say, 0.2 percentage points. So the standard maybe rate might be, let's say, 4%, but the green rate might be 3.8%. And usually it's given on homes that have an A or a B energy rating. The idea behind it is to encourage people, I guess, to buy more energy efficient homes. Although I would argue, is it really in some ways doing that? Because by law, every home that's built now has to be A rated. So I think there is an argument there to kind of say, well, actually, is it really actually helping people buy more energy efficient homes, because those homes would probably, I would argue, have been built and bought in the first place. But that's what we're talking about when we talk about green mortgages.
And for people who may have retrofitted their home or want to find out what the BER rating of their home is, how can they do this?
Okay, so if you want to find out the BER rating of your home, if you've recently moved into your home, by law would have had to have had a BER rating. And every BER rating has to last for 10 years unless you make significant improvements or changes to your home. But if you don't know what the BER rating is, or you don't have one, or it's gone out of date, there's a few things you can do. Probably the easiest thing to do is to look on the SEAI, so the Sustainable Energy Authority of Ireland. They have a list of BER assessors that you can contact, and it's important, obviously, that you go to an official assessor, that you don't get your friend or your dad's friend or whoever to go out and do it. It has to be an official person. They will come out to your home or your apartment or your house. It'll usually take maybe like an hour, and during that time, the assessor will take pictures. They'll use instruments to look around your home. They will look at your windows. They will look at your heating sources. They might go up into your attic. They'll do all those types of things. And then they will come up with a grade for your home, either from A to G, as well as a written report. And in that written report, they will tell you what maybe improvements you could make if you wanted to increase or improve the BER rating. And it will usually cost between maybe €200 to €300. So that's how you can get a BER certificate if you don't already have one. And then with that BER certificate, once you know what the energy rating of your house is, you can then potentially go search for maybe a green mortgage rate if particularly your home has an A or a B rating.
Whether you're a first-time buyer, home mover, or mortgage switcher, you can get your mortgage with bonkers.ie using our free mortgage broker service. Our mortgage advisors will be with you every step of the way, from approval in principle to your mortgage drawdown.
Now, at the beginning of April, AIB, EBS and Haven announced that it is cutting its fixed rates on its green mortgages by 0.2 percentage points. And this discount is now available to new customers and existing customers looking to get a fixed mortgage. So can you tell me a little bit about this offer and who is eligible for this green discount?
Yeah, sure. So it was welcome to see, in the sense that it's good to see mortgage rates begin to ease downwards. So we were talking earlier on about, is the ECB going to decrease interest rates? Will banks follow? They're kind of already beginning to ease some of their rates. They haven't made any widespread cuts, but some rates with some banks are beginning to ease. And what AIB and its subsidiaries, EBS and Haven, have done is they have decreased their green mortgage rates, which already obviously come with a discount compared to the non-green rates, by another 0.2 percentage points. So with AIB, if you have now, a lot of first-time buyers, maybe even switchers won't have this, but if you have a loan-to-value ratio of less than 50%, you can get a rate of 3.45%. And actually with Haven, you can also get a rate of 3.45%. Now with Haven, it doesn't matter what the loan to value ratio is. So they're now actually the cheapest rates in the entire market. So that was a big development. With EBS, its rates start from 3.55%, its green rates. So it's welcome to see, but to get that, you have to be buying a home or in a home that has either an A or a B energy rating. Now, in terms of who it's available to, obviously it's available to first-time buyers. It's also available to movers and switchers. So if you are in a home and you have a mortgage and it's A or B rated, you can switch to one of these new rates. But also if you're an existing customer of either AIB, Haven or EBS, you can avail of these rates as well. But again, you have to be in a home that has an A or B energy rating. And if you have a variable rate, that should be fine because there's no problem changing from a variable rate to a fixed rate. But if you're on, let's say, a fixed rate with AIB and you want to break out of the fixed rate, there could be a charge for doing that. That's something to be careful of. But if you're an AIB customer and this year your fixed rate ends, this will be one of the rate options that is available to you, provided you meet the criteria. So that's good.
So you mentioned there that AIB and Haven are now offering the cheapest rate on the market at 3.45%. And I guess the most important question a lot of people will have is, how much money am I going to save?
Yeah, so I mean, if you're taking out an average size mortgage of between maybe 250 to 300,000 euro, you could save maybe up to 400 euro
a year.
Yeah, 400 euro a year. So it's not an insignificant amount. Like I said, it's a 0.2 percentage point cut. It's now the cheapest rate on the market. But the key thing is, you do, fortunately or unfortunately, whatever way you look at it, you have to have either an A or a B energy rated home. And with AIB in particular, there's now a pretty big gap, but it's kind of controversial. And I don't know what listeners will feel, but there's a big gap between its green and its non-green rates. So for example, if you were a first-time buyer, standard 10% deposit, borrowing 270,000, 300,000 euro. If you were able to afford an A or a B energy rated home, you could get this rate of 3.65%. If you have a 10% deposit, like I said, 3.45% if you had a huge deposit. But then the cheapest non-green fixed rate with AIB is 1 percentage point higher. It's 4.65%. So it's a really, really big gap.
Big difference.
And I guess you kind of have to ask, is that fair?
And we mentioned there that it's on fixed rates. Are AIB and its subsidiaries going to expand this across their other mortgages, so with variable rates?
So they might. So this again comes back to what's the ECB going to do later in the year. So it's likely, as we said, they're going to decrease rates probably, I'd say, from around June, and they might decrease their rates by 1 percentage point in total. So the ECB's deposit rate is now 4%. Its main lending rate is 4.5%. That's the rate off which trackers are priced. So they might go down to like 3% and 3.5% respectively by the end of the year. If that does happen, I think you will see some movement from AIB and indeed all the other lenders. They will respond to that. Maybe not immediately, but maybe by the end of the year or early January, they might start tweaking their fixed rates for their new and existing customers, like their non-green fixed rates and their variable rates downwards. But again, if you're a tracker customer, happy days, your rate has to go down anyway by law. But the terms of your contract, for everyone else, it is a little bit clear cut. But I would say that, yeah, I think we probably will see more widespread reductions, particularly as we head into the end of this year and the start of next year. But don't bank on getting the full ECB reductions because, as I keep saying, only half of the increases were passed on. So we're probably not going to get the full extent of the decreases. But a lot of it might depend on competition as well, Caoimhe. You know, it could depend on media pressure, things like that.
Speaking of competition, so nice little segue in. AIB, EBS and Haven aren't the only lenders that have kind of changed the market with green rates. We had a big announcement from Bank of Ireland this month that really shook up the Irish mortgage market with a new pricing structure which is based on the energy rating of a property and not the loan to value ratio. And this is a first for the Irish market and potentially for Europe. So can you tell me about Bank of Ireland's Ecosaver mortgages, and are they more attainable than the AIB ones?
So Bank of Ireland has really shaken things up because, as you said, previously, the rate that you were offered as a first-time buyer, mover or switcher depended on how much equity was in the home. So that's what we usually call the loan-to-value ratio. So let's say, for example, you were buying a home for 300,000 euro and you had your 10% deposit. You'd have a loan-to-value ratio of 90% and you might be offered a rate of 3.95%. But if you had a 50% deposit, you had a really, really big deposit, you might be charged a rate of 3.65% because it's less risky for the bank. And that is pretty standard across the Irish banking sector and indeed across Europe. Bank of Ireland has now completely ripped up that rule book.
It's changing everything.
Yeah, and what they're now doing is going forward, the amount of equity that you're pumping in won't make a difference. Now, you'll still have to have your standard 10% deposit, but what they're doing is they're basing the rate that you're given based on the energy rating of the home. But there'll be a discount for basically every type of rating.
So unlike A or B.
Yes, exactly.
Just A to B.
Which is just A to B.
Yeah.
So basically, if you buy a C-rated home or a G-rated home, there'll be also a discount. So what Bank of Ireland is doing is it has a base rate, and the base rate is given to people who don't have a BRRRR rating or who can't get one, or whose rating is so bad it doesn't even fit the A to G scale, for example, okay? That'll be the base rate. And then from A to G, there'll be a discount of 0.35 percentage points down to 0.05 percentage points based on the energy rating of the home. So, for example, if you buy an A-rated home, Caoimhe, you'll get 0.35 percentage points. If you buy a G-rated home, you'll only get a discount of 0.05 percentage points. But then, like I said, it goes, it's a sliding scale. So in many ways, it's more attainable because a lot of first-time buyers can't afford new build properties. And in order to get an A or B-rated home, in most cases, it has to be a new build.
Yeah.
So basically, any home built probably pre-2010 would not be A or B rated. They would have been very, very energy efficient, maybe for their time, but just the technology wasn't there. So like the vast majority of homes out there are C, D, E rated. So a criticism in some ways, which we've kind of touched on, is that it was kind of, the preserve of the wealthy. It was only if you could buy a really energy efficient home. Now Bank of Ireland is saying, do you know what, even if your budget can only stretch to a C rated home or a G rated home, we're still going to give you a little bit of a discount. And when you look at Bank of Ireland's rates compared to where they are now, actually in a lot of cases most people will end up paying either the same or a little bit less. So it's kind of like actually the equivalent of Bank of Ireland reducing interest rates by 0.2 percentage points like AIB. And I know it might be difficult for listeners to get their heads around, and certainly in the media the focus has been on this whole energy rating thing, but a lot of first time buyers might be like, well, hang on, like
I have to get a second hand home.
But they might be kind of saying to themselves like, well, what does it mean? Like, am I paying more or less? In most cases you'll actually probably be paying a little bit less, which is great, which is really, really good. And it just makes things, in some ways you could argue, a little bit fairer. And and obviously then things will be a little bit cheaper. And that's not just on fixed rates, by the way.
Only on fixed rates.
So if you want to get a variable rate with Bank of Ireland, they now just offer one variable rate, 4.15%, and that might go down later on in the year, but that is offered regardless of the energy rating of the home you buy or even your deposit. So it's very strange. In some ways, like it's really like a one size fits all, but very much a new way of doing things.
Yeah, I'm really trying to push people to have more energy efficient homes, which we do support, but it's just an expensive thing to expect people to be able to finance.
Exactly. And for some people, they might be like, well, hang on, there are no new build homes in my entire county. Like some people might say, I can't actually buy an A or B rated home. There's literally nothing for sale. So it just makes things a little bit more flexible. And as I said, it still rewards people for trying to buy more energy efficient homes or make improvements because these rates are open to existing customers as well. But it recognizes that not everyone can afford an A rated home or a B rated home, or not everyone can retrofit their home to an A or a B standard. So it's rewarding people who only make incremental improvements.
Now, a lot of responses we have had from our consumers over the past few days since this story has broken is, what has an energy rating got to do with my mortgage rates? So what could you say to that?
I suppose, though, it's by trying to encourage people to, buy more energy efficient homes. But the argument, of course, is with those homes that probably already, they were already there, particularly when it comes to new homes. Like I said, those new homes have to be built anyway. So it's not necessarily changing things. I think that where it particularly might help people is if they are in a home and they make energy efficiency improvements. Those people can then apply for an updated BRRRR certificate and then potentially apply for a lower mortgage rate. So it's kind of trying to encourage people, I suppose, to buy more energy efficient homes, but also to make improvements to their homes and to be rewarded for that.
Now, there will be Bank of Ireland customers who are already on a green fixed rate with them. Mm-hmm. Are they going to automatically get this discount that's just been announced?
So it depends. These rates, by the way, they're open. The Bank of Ireland rates are open to first-time buyers, movers, and switchers, and they're both open to new customers and existing customers. Not to get things too complicated, but these Ecosaver rates, this new way of doing things, the rates that Bank of Ireland offers its new customers are actually slightly different to the rates that it offers its existing customers. But again, it's the same idea, A to G, a sliding scale discount, but the rates are slightly different. So if you go on to bonkers.ie, you will see the rates for new customers. That's just something to be aware of. But if you are a Bank of Ireland customer, if you're on a variable rate, you can switch to one of these new Ecosaver rates without hassle. If you are currently on a fixed rate, you can wait until you come to the end of that fixed rate, and then you'll be presented with these new rates as an option to refix. Or you could break out of your fixed rate to go into one of these rates, but there could be a charge for doing that. But obviously rates, Caoimhe, have gone up over the past 2 years, as we've discussed. So whether or not someone saves by moving to one of these rates depends on the rate that they're currently on. So, I mean, not so long ago, 2 or 3 years ago, Bank of Ireland had a rate as low as 1.9%.
Yeah.
The lowest rate now it offers is around 3.6, 3.65%. So if you were one of those lucky customers who managed to fix...
You won't be breaking your...
Yeah, you're not, so that really kind of depends. But obviously, if that customer, that hypothetical customer at 1.99%, eventually that rate, I think it was a 4-year fixed rate, will come to an end and you are going to have to refix. You then now will be presented with these rates, which would have been lower than the rates you would have been presented with beforehand until now. But whether as an existing customer, you're going to save really depends on the rate that you're currently on.
So if I sign up for Bank of Ireland's new green mortgage rates and my home is an F rated home, and then in the next few months I upgrade my home to a C energy rating, will I get that discount? Will it change automatically, or what situation will I find myself in?
Yeah, so you can get a discount. And this is what I think Bank of Ireland is really also encouraging people to do. It's not just about people who are buying new homes. It's also about encouraging people to make energy efficiency improvements to their existing homes. But yes, if you take out a mortgage with Bank of Ireland and you move into a new home and it's maybe G or EF, whatever, and over the next year or so you make improvements, you can then apply for a bigger discount. But to do that, you'll obviously need to show the bank that you now have a better energy rated home. So you will need to get a new BER assessment. You'll need to pay €200 to €300 for that, and you'll need to present that to the bank. And then once you present that to the bank, you will be able to obviously avail of a higher discount. But if you have locked yourself into a fixed rate, you could be charged for going out of that fixed rate. That's always the key thing to remember. There can be charges for breaking fixed rates early. But yes, I mean, the key thing is, even as an existing Bank of Ireland customer, these rates are open to you. And yes, as you make energy efficiency improvements over the months and years ahead in your home, you can be rewarded by being available to, move up the discount rating, if that makes sense.
For a lot of people, this might be very complicated. So what features have Bank of Ireland put in place, if any, to help people understand their energy rating and to go ahead with this process?
So they're opening up a one-stop shop to help people understand this. So I'd encourage people to go on to Bank of Ireland.
And to retrofit.
Yeah, one-stop shop for retrofitting and understanding how things go. So check out, obviously, the Bank of Ireland website, but also here at bonkers.ie, we have a mortgage brokerage service. Come to us, chat to us. We can tell you about the rates, explain to you the rates that you're going to get. And I'd encourage people as well to look at the SEAI, so the Sustainable Energy Authority of Ireland. They've lots of good information as well on things like BER assessments and what you can do to improve the energy efficiency rating of your home.
Great, yeah, and they can check out that online portal with Bank of Ireland as well.
Yeah, of course, yeah.
Bonkers.ie is a one-stop shop for saving on all your household bills. Switch and save today across a range of energy, broadband, banking and insurance products with our free, easy-to-use tool.
People are probably a little bit annoyed that the benefit of having a large deposit and the loan to value ratio for their home is now gone.
Yeah, that's a fair point, actually, because previously, if you were one of the lucky ones, when I say one of the lucky ones, when you actually look at the figures, you'd be surprised how many people buy homes that have pretty big deposits of maybe 20 to 30%. I was not one of them, but you'd have people who are literally scraping to get the minimum 10%. Yeah. But there are people out there who had, big deposits, 20, 30, 40%. And for now, that ain't going to make any difference. So they might feel a little bit hard done by, but I would just kind of reiterate again, Caoimhe, you still need your 10% deposit. And I was saying previously as well that in most cases, these new rates will probably see people pay less. The exception is those people who had maybe really, really big deposits and were able to get, a loan to value ratio of below 50 or 60%. And they would have gotten maybe really, really cheap rates. For now, they might find that actually, because that doesn't make a difference, that the new rates from Bank of Ireland are no different for them. They're just the same.
And do you think other lenders are going to follow suit and copy Bank of Ireland's new
I have no idea.
system?
I really have no idea. Like I said, it's a really interesting and new way of doing things. And previously, without getting too technical, the reason why you'd usually be charged a lower rate is because it was less risky for the bank. So let's say, for example, you bought a home, I lent you €270,000. It's a little bit more risky for me if you start paying back your mortgage, let's say, and the bank tries to repossess the home. If property prices have gone down and you only had a 10% deposit, the bank may get back less than it had lent you. Whereas if you have a really, really big deposit, it's less risky for the bank, because if property prices fall by, let's say, maybe 10 or 15%, the bank still knows that if you stop paying your mortgage and it repossesses the property and it sells the property, it'll cover the loan because you provided such a big deposit in the first place. So that makes sense. So are banks now saying that that's no longer the case, that that's no longer important? Because previously the amount of equity that you stumped up was really the key and most important thing in the type of rate that a bank would lend you. So it's a new way of doing things. For some people, it might complicate things a bit much. Although I do like the fact in some ways that the variable rate has just been standardised and it's now just 4.15%. Another quick thing to add is now cashback isn't available on variable rates with Bank of Ireland. So Bank of Ireland used to offer cashback of up to 3%. Now it's not offering that anymore, but it does offer a lower standard rate of 4.15% on variable rates, whereas previously it could have been as high as 4.75%. So swings and roundabouts, but yeah, it will be interesting to see, do the other banks copy this?
According to the Sustainable Energy Authority of Ireland, in the first half of 2023, 19,000 energy upgrades were completed in Ireland. Do you think these new green mortgage rates will push homeowners to retrofit their home more?
It will definitely help. I mean, the cheaper the financing, the better. But let's be honest here, the biggest barrier to people is the cost. It's the cost. It's finding the men or women that can do the job. If you're doing a very, very deep retrofit, you may actually have to leave the home
for up to 70,000.
It could be up to 70,000. You could be out of the home for several weeks. The rental market is an absolute disaster. Where are you going to stay? Do you have a friend or relative that you can stay with? So they'll definitely help, but it's not like it's going to be some, magic wand that's going to kind of fix everything. And even though there are lots of grants out there to help people make energy efficiency improvements, the cost, as you said, it could be 60, 70, sometimes even more, and it's not cheap. And is a small 0.2 percentage point reduction going to make a difference? I'm not so sure. I think it's more the grants that's really the big thing. And another issue as well, that in some cases you have to have all the money up front and then you apply for the grant. And I do get that, because the government and taxpayers who are stumping up, the funds for the government to then lend to other people need to be sure that the work's actually being done. But it does mean that it can be...
People are out of pocket.
Yeah.
A big criticism about these changes are that they're not fair. They're not fair on people who aren't wealthy, because they can't afford to retrofit their home if they are in that situation instead of buying a...
and that is a fair thing. I mean, it's the same with electric cars.
Are we rewarding the rich?
Yeah, are we rewarding the rich? It's a fair criticism, and a lot of people, and I think it's kind of the squeezed middle, because the top maybe 10 to 20% of earners will be fine, and in some cases maybe the bottom percentage of earners could be fine, because they might be in social housing, and this will be done for free basically. The government will eventually upgrade all social houses, and then you have the squeezed middle who might feel they get very little from the government. They're not in subsidised or social housing, they're not on HAP, they're not in a social housing getting cheap subsidised rent, and they want to get solar panels installed or new heating, and it's still several €1,000 even after the grants. And as we previously mentioned, there's now a big gap as well between some of the rates. Like, there's a huge gap with the AIB between its green and its non-green rates. And is that fair? Some people might argue that it's penalising people who aren't rich enough to buy an A or B rated house, or who can't make the energy efficiency improvements that are needed. So it's a fair question.
And are these discounts actually going to save people money? If I look at AIB, for instance, it's raised its mortgage rate by 1.7% in the last few months. Is 0.2 percentage points really going to make a difference to people's mortgage rates?
Yeah, it's true. Rates have gone up, but rates went up because the ECB was increasing rates, so the cost of funding went up. But even after these rate decreases, rates are still a lot higher than they were a few years ago. And you were mentioning earlier on that there's tens of thousands of people who are on fixed rates that are soon to end this year. Some of those people could have locked in at fixed rates of maybe 2 to 3% 2 or 3 years ago. Today, the cheapest rate they'll get in the entire market is 3.45%. And to get that rate, you have to have an A or B rated home. So a lot of people are going to be faced with higher rates when they come to refix, even though rates are falling. So people are saving in the sense that they're paying less than they otherwise would have, maybe. But yeah, even despite these rate reductions, rates in Ireland are still quite a good bit higher than they were around 2 to 2.5 years ago because of those ECB rate hikes.
And lastly, Daragh, do you think this is a step in the right direction for the mortgage market?
Look, it's great to see rates going down. In some ways, I like what Bank of Ireland has done because, as I said, in most cases, it does equal a rate reduction. So before you start even looking at the complexity behind the different energy rating options and stuff, in a lot of cases, it will actually mean that consumers are getting a lower rate. And if you're on a variable rate, as I said previously, you could have been charged as high as 4.75%, depending on your deposit. Now you'll get a flat rate of 4.15% variable. So in essence, what Bank of Ireland has done is it's decreased rates for most people. Great. I'm always happy to see rates go down. With AIB and the others, again, good to see rates go down, but I just am a little bit conscious of the very, very big gap that is now developing between green rates and non-green rates. And is it going to be buying C-rated homes and being charged absolutely insane rates, and then the privileged elite getting super, super cheap rates? I just don't want to see that gap get any bigger.
Yeah, it's something to think about anyway. Food for thought. And that brings us to the end of our podcast on AIB and Bank of Ireland's new green mortgage rates. I want to give a special thanks to Daragh Cassidy.
Thank you.
So thank you for sharing your insights into these rate reductions. And lastly, I want to give a shout out to our research and editing team. So thank you, Theo and Zoe. If you want to learn more about green mortgage rates available from Ireland's main lenders, head over to the article section on bonkers.ie to read our in-depth articles on the topic. Don't forget, you can use our free mortgage broker service to find the best mortgage rates for you in the country. If you have any questions, comments or mortgage advice of your own to share, reach out to our team on Facebook, Twitter, Instagram or TikTok. Remember to like and subscribe to the bonkers.ie podcast on your podcast app of choice. Bye for now.